In this short video, we'll talk about what it means to have a disregarded entity. In most countries, an entity is classified as a corporation, partnership, or trust based on the legal formalities of how it was set up. In the US, though, there are rules under which a business entity, including an LLC, may elect whether it's treated as a corporation or as a flow-through entity. These rules are called the check-the-box rules. An LLC, or any business entity, gets to choose. The check-the-box rules don't allow a U.S. corporation to choose, and don't allow a foreign corporation of a type that could be publicly traded to choose. Those entities are treated per se as corporations. Everybody else gets to choose. The election is made on IRS Form 8832 by checking a box. Here's a link to another video on how to make the check-the-box election. The IRS regulations indicate that if an entity has only one owner and it is not treated as a corporation, then the entity is disregarded as separate from its owner. The attorneys who wrote that regulation thought everybody would understand what disregarded meant, but that's been difficult for my staff and students over the years. Disregarded comes in two forms, each with the same effect. First, a business entity can make a check-the-box election, and if it has one owner, it's disregarded. Second, a 100% subsidiary of an S corporation can elect to be a qualified subchapter S subsidiary. In both cases, the entity is treated for U.S. tax purposes as if it did not exist. Disregarded in the regulations means just what it does in the dictionary, something to which you pay no attention. When this comes to entities, it becomes almost an existential question. Does the entity have any effect, or is it just an illusion? For legal purposes, it exists, but for U.S. income tax purposes, it does not. Everything about a disregarded entity flows through to the owner of the entity for U.S. tax purposes. This goes beyond most flow-through, like with partnerships, where only the results flow through. For a disregarded entity, the transactions themselves flow through. When the entity and the owner are on both sides of the transaction, then the transaction itself is considered not to have happened. It's almost like my disregarded entity is a mini-me. If I give mini-me some money, then I still have money for tax purposes. Nothing happened. If I sell mini-me property, then for U.S. income tax purposes, it's still my property. The sale didn't happen, and mini-me didn't buy the goods. I still own them for U.S. income tax purposes. Let's take an example. Say I sell some inventory to my disregarded entity, Subco Limited. Subco is a UK company which made an election on Form 8832 to be disregarded as separate from its owner, me. The sale happens on December 1st, 2014. This is ignored. It didn't happen for U.S. income tax purposes. But it did happen for legal and UK tax purposes. Subco then sells the goods in January of tax year 2015. This is considered for U.S. tax to be a sale by me in 2015. I recognize the sales proceeds in 2015 and my cost of goods sold in 2015. subco doesn't exist. For UK tax purposes, subco does exist. So it pays UK tax on that sale in 2015, using as its cost of the goods the amount it paid me. But since subco is checked, for US tax purposes, I'm considered to have accrued and paid that same UK tax. For US tax purposes, since subco doesn't exist, I look to my tax year to calculate my US tax. Subco, though, has its own tax in the UK, and it may be on a different year for UK tax. Let's look at some other implications. If I loan money to my disregarded entity, the loan may exist for tax purposes in the country in which subco is organized. The interest paid by subco may be deductible there. But for US tax purposes, the loan and interest don't exist at all. Remember, I have to pick up all of subco's transactions as if they were my own, except those between subco and me. I'm doing more than just including net profits. I'm recording subco's basic transactions as if they were my own. Everything mini-me does is considered to be me doing it. Disregarded entities may improve foreign results. If I pay interest from my German disregarded entity to my UK disregarded sub, I get zero withholding taxes under the Germany-UK treaty. I get a deduction at Germany's higher tax rates and recognize the income at the UK's lower tax rates. For US purposes, though, the interest income and the interest expense didn't happen. So my overall foreign tax goes down with no impact on how and when I recognize income for US tax purposes.
Enjoy life. Relax. We can help you find the right path. Let your mind and your foreign income flow untaxed. Treaty Shopper software will find the path that you need to relax. Visit us now.
There's a caution, though. The IRS has proposed regulations limiting how a taxpayer can use these transactions between disregarded entities. Regulations are not yet effective, and there have been some critical comments on them. Keep alert for changes in this area. There are also potential implications under the Subpart F branch rule related to manufacturing and sale of goods. Some quizzes are easy, some not so easy. Let's have a really hard one. But before you take it, be sure to read the regulations and watch this video again. Another implication is that there is no transfer pricing issue for US tax for transactions between me and my disregarded entity. The transaction doesn't exist. This lets me focus on the non-US side. If subco is in a jurisdiction that says it has to make a particular profit, then I let it make that profit. And I don't worry about any US transfer pricing issues. For me and the IRS, it's just moving money from one pocket to another. The international implications of disregarded entities are big and have been around since long before the IRS simplified regulations in 1997. To sum up, a disregarded entity is a figment of somebody else's imagination. For me and the IRS, it doesn't exist. It's just part of me, even if me is a corporation. I hope you found this useful, whether you're doing domestic or international tax. And thanks for learning with me.